Hello, options traders. Steve Ganz here, and I know I've done a series of videos on butterfly trades and why I really like the butterfly. And one of the common questions I get about the butterfly is, but it's got such a low chance of profit. Now, I've addressed these questions in the comment section where I did the butterfly videos, but I have an opportunity here to show you a live example of why I consider this largely meaningless. So, this is the percent chance of profit when I put my butterfly on, and that chance of profit is based on the butterfly, based on the price of the underlying being under the tent of this butterfly. So in this case, between 2080 and approximately 2160 at expiration. And I grant you that if I'm putting this on all the way back on July 11th, and it's a September 20th expiration, that gives me most of July, August, and September, so close to 3 months or so, where the market can go anywhere. So the chances of it not landing in this relatively small range, 100-point or so range, I get it. It's fairly high that it's not going to land in there. That's why the chance of profit shows so very low in this. However, the key to the butterfly is its adjustability. So let me show you what I mean by that. When I come back and I look at when I put this trade on, I put on this butterfly here when the rut came up and it looked like it was hitting old highs. Now my expectation there is that we might have gotten a pullback in the market. And in that scenario, this type of trade, a flat fly that was centered around where the current market was, I considered that to be a good trade at the time because that a flat butterfly carries slightly negative delta, which means that if the market did in fact pull back there, this trade would create some profitability in it. That would have been a good scenario for this trade. So that's why I specifically chose to put this trade on right here when we closed at around 2120, and this is back on July 11th. That's why I selected this specific trade. It's centered at 2120, entered on July 11th. If we did in fact get a little bit of a pullback, that would have brought profitability into this trade. However, as you can see, that's not what happened. The market continued to rocket higher from there. So this is the trick or the key to the butterfly trade, or really any trade. But in the case of the butterfly, it's a fairly easy to adjust trade, and that's why I like it. So when the market ripped up here, this was a huge move. I mean, we went from 2030 all the way up to 2280. That's more than a 10% move in just a couple of days here in rut. Crazy, crazy, crazy big move. It was almost a 4 standard deviation move, virtually unheard of. I think it only ever happened 2, maybe 3 times in history that you had that big of an up move in the rut that wasn't off of a dead cat bounce. In other words, it's not like we had a huge massive sell-off and then we rallied that much. The market had been trading sensibly and reasonably, and then all of a sudden we have this massive move. So again, in a regular butterfly, well, that's not good. I've run way outside my tent. Had I left that butterfly on, had I never adjusted it, here we are, September 2nd, this trade would be down a little bit. However, this was my starting trade, but this was the trade that I adjusted. This adjustment was put on July 16th. If we come back and look, when we ran up here on July 16th, I felt like, okay, it's time to make an adjustment to this butterfly. I need to widen my tent in this case, and I need to widen it to the upside. So that's what I did. In my butterfly, I bought back a few of these call spreads, and then I resold them all the way out here at 2300. My premise being that when we were up here at 2180, that I felt like we weren't going to go above 2300 and sustain above 2300. And in fact, we just touched 2300 here, and then we sold back off. So right now in this trade, I am pretty well centered in my tent. My tent is massively wide. It goes here from, roughly this 2090 all the way up to 2320 almost. So a very, very wide range that this can now decay. And you can see my chance of profitability now in this trade is 69%. And that's just because I had the ability and the know-how to adjust this trade to accommodate a much wider range when it broke out from under the tent. So my next moves on this trade, I'm not ready to make it yet. You can see I still have a fairly flat T0 line here. I mean, RUT can drop 100 points. We can drop from this 22.13 down to, 21.13, and I can still be profitable. We can shoot up quite a bit, still be profitable. So there is a nice wide tent that I can continue to decay under. But at some point in the not too distant future, I will look to thin this out. I'll pull off maybe one or two, maybe even all three of these call spreads that are currently going to be profitable. And I would probably pull off maybe three of these. I'll basically just do a condor trade. And whatever I close out here on the downside, I'll also close out on the upside, just to essentially thinning out this trade, taking some risk off the table, but still leaving myself the ability to continue to generate some profits within this nice wide range. So I would say look for this move to maybe happen in another week or so, but I just wanted to provide that update on a butterfly and again stress to people that when I'm trading a butterfly, I am not trading this. I am not putting on a butterfly, hoping that it lands under my tent and then taking that butterfly off. I'm trading the butterfly because it has such a flat T0 line. This thing can move a lot in either direction without a huge impact to my P&L. I consider it to be, therefore, a less risky trade in many, many ways than an iron condor, a vertical spread of some type. It just has a much better reward, which is this peak, to risk, the amount of risk I might be taking in this trade. It just has a much better reward to risk ratio, and again, is easily adjustable to significantly widen out that tent to the upside or the downside, and once I have a sense as to which direction the market is going. So that's really the key to the butterfly and why I like this trade. One final little thought. The 69% is if I carry this trade all the way to expiration. There's 18 days left here. I am not probably planning on carrying that all the way to expiration. Once we get about 5-6 days in, the P&L in this is going to double what it is now, assuming our market stays in a general range. That would be a logical time for me to maybe go ahead and pull this off when I get up to, maybe the $4,000 in profit range, around that 8-10% profit range. That's going to be what I'm looking to do on this. And again, if I'm not carrying that all the way to expiration, this would be a higher percentage. Yet again, because that 69% is assuming that I'm going to be carrying this another full 18 days, which of course gives the market a much wider range. It can move in those 18 days. If I'm looking to only carry this another 7 to 10 days, the amount it can move in that 7 to 10 days statistically is going to be less. So that would therefore give me even a higher percentage chance of profit here. So hopefully that all made sense. If you like this content, please give me a comment down below, like, subscribe if you would. And thank you so much, everyone. Take care.